In this lesson, we're going to be analyzing candlesticks and understanding how we could read them in the foreign exchange market. So without further ado, let's jump into TradingView and take a look at these candles. So first things first, we're going to be dissecting the anatomy of these candles. So we could see this first candle is known as a bullish candle, and it's usually outlined as a green candle. And this is just saying that price is rising on the chart. Inversely, we have a bearish candle, and it's typically shown as a red candle. And this is saying that we're falling on the chart, right? Prices are falling. So if we look at the anatomy very quickly, we can see that the filled portion of these candles are known as the real body. And this is just the difference between the open and closed price. Now we can see that there's portions of the candle that are not filled. And this is known as the shadow or wicks. Most traders refer to these as the wicks, but they could be referred to as shadows as well. And these shadows or wicks signify where price has ranged within that candle. We have not opened or closed at this portion of the candle. It is just where price has traveled, but has not closed or opened. So you could easily identify the highs and lows of a candle if you identify the high of the wick or the low of the wick. And that's consistent with every single candle that you see in the foreign exchange market. Now, the opening and closing prices are a little bit different for bullish and bearish candles. Now, we can see with a bullish candle, the open price is near the bottom of the real body, while the closing price is near the top of the real body. And that makes sense because we're rising in price, right? Inversely, with a bearish candle, the open price is at the top of the real body, while the closing price is at the bottom of the real body. And that makes sense because we're falling in price with a bearish candle. So this is how you effectively read these candles. You want to make sure to understand the wicks in the real body and understand the opening, closing price while understanding the highs and the lows. So let's take a look at the strength of these candles and how you could monitor the strength of these candles. And there's two different pieces of criteria that you want to analyze when you're understanding and monitoring the strength of these candles. So when we analyze the strength of these candles, there are two pieces of criteria that we need to monitor in order to get a good understanding of how strong or weak these candles are. The first is the size of the real body. So if we take a look at this diagram, we could see that the strongest candles, both bullish and bearish, have very large real bodies. The larger the real body, the more significant and stronger that candle is. So we want a really strong difference between the open and closing price. So we could see for a bullish candle right here, we have no wicks, we have all real body, right? And same thing with the bearish. It is a very, very, very strong candle. But as the real body begins to shrink more and more, the weaker and weaker and weaker that candle gets. So the first thing you want to monitor is the size of that real body. Do we have a very strong difference between the opening and closing price? Or do we have a very small real body that's not showing us much strength? So that's the first thing you want to monitor when you're looking at the strength of a candle. Now, the second piece of criteria that we need to analyze to fully understand the strength of these candles is the position of the real body on that candle. So if we're taking a look at these candles in this diagram, we could see that for bullish candles, we want the real body to be positioned more towards the top half of the candle rather than the bottom half of the candle. And the reason being is because price is rising. So it makes sense that the open and the closed price is positioned more towards the top of the candle rather than the bottom of the candle. And we could see this in this diagram. We could see that if the real body is positioned more towards the top, it is stronger than per se the real body being towards the bottom, right? If we have a strong wick towards the top of a bullish candle and the real body is at the bottom, it is completely weak, right? Buyers have tried to send price towards the top, and then we ultimately close towards the bottom of the candle. And then inversely, with a bearish candle, it is completely the opposite, right? For a bearish candle, considering we want to close towards the bottom of the candle, we want the real body to be towards the bottom of the candle and not the top of the candle. So we could see that the real body positioned towards the bottom of the candle is much stronger than if the real body is positioned towards the top of the candle. Because again, if it is towards the top of the candle, that means that sellers have tried to drive price towards the bottom of the candle, but the buyers have actually sent price back towards the top of the candle and closed towards the top. So for bullish, we want price to close towards the top of the candle. And for bearish, we want price to close towards the bottom of the candle. So make sure you're using all these different pieces of criteria of the size of the real body and where the position of the real body is relative to the candle so that you could get a full picture of how strong that candle is. Now, let's take a look at the price chart just so that we're able to practically apply all of this information when we're actually doing our technical analysis. So we can see on USD Canadian dollar, we are creating higher highs and higher lows, and we are in a bullish uptrend. So I'm going to take a look at an impulse versus a corrective movement and how the candles look a little bit different during those impulse and corrective movements. So we could see during this impulse move right now, we could see that we had these strong real bodies closing near the top and the bottom portion of the candles and barely any wicks, right? And that is showing that these are very strong candles because it is an impulse move towards the upside. Now, when we begin to present wicks around a certain level or market structure, that is identifying that we could potentially reverse in the other direction. The initial trend is weakening and we could reverse towards the other direction. So, and we could clearly see this in this market structure. We could see that we have these strong impulsive candles that have very large real bodies. Then once we get to this structure point, we get smaller real bodies and we're starting to show very, very strong wicks, right? And we're wicking around this significant horizontal level, which is giving us a good indication that price could reverse around this significant horizontal level. We could see that we're barely closing between this level besides this little spike right here. We're barely closing through this level. We are just showing a bunch of wicks. And like I said, wicks just signify a weakening of the initial trend. So we could see, like I said previously, we have a strong impulse move towards the upside. We're presenting nice wicks. We're barely closing through the level, and then we could begin to see these strong bearish real body candles presenting towards the downside. And like I said before, we could see that the real bodies for a bearish candle weren't too large over here, but we could see now they are becoming prominently much, much larger when we actually reverse at this structure point. We could see that we're creating much larger real body bearish candles, which is giving us a good idea that we may be reversing from a bullish trend to a bearish trend, right? And of course, this could just be a corrective move to continue back towards the upside, but it's very important to identify not only the size of the real body, but the placement of the real body on the candle itself. And again, we could sort of see this with these candles. Even though we have a bullish candle here, we could see that the real body of this bullish candle closed near the bottom of the candle, which means that it's a rather weak bullish candle, right? And we see this time after time again. We could see this bearish candle is very strong considering we're closing near the bottom of the candle. The real body is closing near the bottom of the candle, which shows us clear bearish sensitivity around this significant horizontal level. And it just continues to play out over and over again on this market. So that's how you're identifying the strength of a candlestick and how you should read them. So briefly, we're just going to identify and go back to this diagram. So again, a bullish candle is going to be outlined by a green candle and a bearish candle is going to be outlined by a red candle. The high and lows are identified by the highs and lows of the wicks. And the open price for a bullish candle is the lower portion of the real body. The closed price is the top portion of the real body. And for a bearish candle, the opening price is the top portion of the real body, while the bottom portion is the closed price of the real body. So that's all we got for this lesson. I hope you learned something, and I'll see you guys in the next one. Cheers.